All right, everybody. What's happening? Happy Wednesday. March 4th, Daily Profit Land. Let's get started. I'll grab the screen here. And off we go. Okay, Daily Profit Land. Chat is up. Blake, I know you're running multiple sessions here today, but I wanted to ask, should be pushing this on YouTube as well. So I'm going to go youtube.com/financial wars. And if we're running this live, I want to get the chat open for both. I'll just mute it, obviously. We're live. Okay, so let's go live, no sound. There we go. All right, that way I can have the chat up and running. We're gonna go here. Okay. Good morning, everybody. So just gonna add a little layer to our sessions. We got a Zoom chat. I'm gonna run also the YouTube sessions. So once we're pushing these in dual streaming, I can have questions answered there. So if you're watching on YouTube, that's youtube.com/financial wars. If you're watching on Zoom, I'll have the chat open for both. Okay. So Christian, good morning. Pete, good morning. Lester, good morning. Jeff, what's happening? Stephanie, Chuck, Greg, Larry, Michael, Steven, Heloise, Bruce, Roger, Gerald, Catherine, what's up? Wade, David, good morning. Good morning. All right. Hey, Andy, how are you? Okay. Well, had another nice win yesterday for daily profit play. It was safely played. We had our top level around the 68.80 handle. Never got there. We had our puts around 66.45. Never got there. Nice safe play. $1.10 took out 90 cents of that $1.10. Nice profit on the day. Didn't hold it all the way to expiration. I was looking for an opportunity to kind of short late in the day. It didn't set up with a good asymmetry like I wanted, so I didn't force any trades. This morning, I'm looking at a potential. This is a future setup. But I have, and this isn't giving me a bias or anything. I'm just kind of giving us a heads up. If this holds true, here is a little futures market alpha arrow that popped up this morning. Now, again, this could be short term. Sometimes we'll see a couple of arrows have to pop up, but for the most part, you can see these arrows have lined up pretty cleanly for arrow sell off, arrows sell off, arrows lift. Right? I mean, within a candle or two, these are proving to be some pretty good directional plays. So, this morning, if we end up breaking this structure or we roll over a little bit faster, then that signal would be kind of showing us signs that things would maybe roll over a little bit. But again, that's a TBD, to be determined. I don't know if that's going to happen. So I'll just keep an eye on that. And going into the VIX, we've had a pretty decent smash in the VIX. Highs at 27 plus. We're back down to 20 essentially. We're at 22.3 right now. That's a pretty big drop. VIX has fallen about 20%. Again, these flare-ups of 20 VIX, we broke 20. Now we're at 27. We had highs here at 25. This VIX is keeping everyone on their toes. So a 22.3 VIX, potentially a 1.4% mover today. Potentially, doesn't mean it's going to happen. Gamma levels again pretty wide. We're going to have a slight gap up, 0.33% on futures right now. Just looking at the short-term technicals, I mean, this gap right here, if the market's going to head up into this area, 68.25, if we're above 68.25, that's positive gamma. Does it get us back into the 6,900 handle? Possibly. One thing I wouldn't mind looking at is, again, if I'm selling calls this morning, if we're going to open up, let's say with futures market around 0.3%, we're probably looking at an open around 68.36, give or take a couple points. So we'll kind of eyeball this as we come into the open. But if we're here at 68.36 with the futures gap and we're looking at our call sides, I'd like to say that our deltas are low enough and safe enough to get trades in above 6,900. And then the put side, because we have such decent skew in the market right now, I mean, it seems nuts that we'd be opening at 68.36 and I'd want to put my put side below 6,700. That's going to be way out of the money, right? Our plus minus on the day, let me open up my broker platform here. Roger, nice man. Got in a buck 15 out at 25 cents yesterday. Excellent trade. Yeah, we did $1.10 out at 20. Not bad. Not bad there. Good stuff, man. Good stuff. Thanks for sharing. If I got Don in the house, I gave Don a shout out this morning. I was in another live session. I was talking about oil. Don, you've actually convinced me to look at an oil trade. I'll explain that in a second. So it was kind of a like a little bit of a shout out, and Don was pretty definitive on hey, oil's going to go to 130 days. So I'm like, all right, I'll put it on my chart. So Don has a forecast on my chart that we might get to $100. Now, what I'm doing technically speaking on oil is here's oil futures. Here's a nice technical swing. So we go from low to high. What I'd like to see on oil, and this is kind of my preference to trade it, rather than needing it to go to $100, what I'd like to see oil do is, this is a nice little spike. We pull back into some fib levels, and I can go define risk long with a bull call spread and probably get 110 to 150% return on a simple bull call spread. And as long as price just goes above my sell strike, so if we get to 100, I get paid, but I don't have to be long and, crossing my fingers that it gets all the way up to $90+. So that's probably my way of trading it, would be just looking at some type of, big move, little technical pullback. I get long here with defined risk, and if I get a little bit of direction or symmetry going my way, then I should be good. If this continues to escalate, sure, Don's going to be right. We're going to $95 or $100, but I don't need that to happen when I just need price to be going up, literally a couple of dollars. So that's kind of my preferred way to trade it, is maybe throwing $500 at it to make 750 to 1,000. I can make it more asymmetrical, but I'm trying to do it with a decent probability of profit. So that's kind of my preference here, is if we get a pullback in oil futures, is maybe gap filling here, trying to find some fibs, and then getting long, and then establishing a line in the sand on a bull call spread. And as long as price goes back up to highs or higher, then we should be in good shape. So I might look at that trade here. There you go. Don agrees. All right. Got Don's endorsement. Good stuff. All right. Tasty, 65.10, 50.4 on Thinkorswim. Wow, those are so different. Again, so different. Here is, let's go SPX. So SPX for the 4th, I've got 65.10. Wow. So Wednesday, 65.10. All right, so we're going to have a slight gap up. I'll measure that 65.10. We do have some ISM numbers at 10 o'clock. I think it's ISM services this morning. Services PMI at 10. We had non-farm, so the ADP non-farm was beating forecast. So forecasted 50K came in 63, revised down from 22 to 11. I have a feeling that Friday's non-farm is going to be something similar to that. So Friday's non-farm forecast is 58K. Previous was 130. I have a feeling we might stay right in line with this. Like the seasonal hiring maybe signs of slowing. So this 130, this could be seasonally adjusted. So if this is revised lower, maybe we have a bit of a dud labor number on Friday, but to be determined again. So 0DT is really all the rage, and we'll see what the market gives us today. We're up about 0.37. It's like, my gosh, man, we've literally seen 1+% gaps at the downside, even up to 0.35, 0.4. That's a big movement where it's like, just we're getting some flows every single day. Every single day. Okay, so let's do some number crunching here. I've got a 65.10 expected move for this morning. So I'm going to go ahead and look at a rough gap, and I'll get my charts doctored up here. So if we go 0.3%, it might open up a little bit higher, but wherever the market opens, I'm going to go up 65 points. I already recentered my daily profit indicator right at yesterday's close. So, I'd like to be selling calls above about 69.15 or 69.20. Let's go up about let's go up 0.3 to 0.35. So 0.35, we're opening up here in about 15 minutes. So we're at 0.35. That's a 68.39 open. So let me plot a starting point there. And let's go up to 65 points. Okay, so there's 65. That would be my kind of market maker efficiency to the upside, taking that gap consideration. And then we take the close from yesterday and we go down 65 points. Keep an eye on the VIX, of course, 65 points to the downside. That would be market maker efficiency there. Okay. So based on the open, again, I can redraw these exactly where we do open this morning based on our futures gap. But that's roughly where our market maker move or expected move should be plotting us for the day. So my goal would be to hopefully be selling calls above this and selling puts below this and see what takes shape for the day. I do know on the gamma side, if we are above 68.25, that tends to hold positive gamma. Today would be an interesting day if we hold up here and we stay up here. That would just be looking to maybe fill this gap area. But then Thursday, Friday, if we finish the week on a sour note, and again, I don't know this, but if we are not going to like break recent highs and we stay like, oh, what a great comeback, but it's not enough to overtake this high, the market rolls over and maybe does this again, tries to test the lows again. So, we're not out of the works yet. I think this 14-week range is real. I think the market, we literally had like a 4% correction from top to bottom. So this isn't like some massive correction that it's like, I want to buy that dip. It's still just noise to me. So there's our recent all-time high. There's our pullback. We're at 4.3%. Is that it? That's all the market can give us is a 4% correction. I mean, we had more of a correction during this sell-off with that illiquid kind of low market breadth rally. That was like a 5 or 6% correction, right? That was a 5.8% correction. So during a illiquid holiday window, this market had a bigger correction than all the crazy dispersion that's been happening under the surface with this market having stocks that, 1/3 of the S&P up 15, 20%, 1/3 of the S&P down 15, 20%. Crazy stuff happening under the surface while the indexes are still not doing anything. So we will see. But I mean, is anybody getting annoyed with this area yet? I mean, it's kind of annoying. It's been 14 weeks. That's a lot. That's a lot of indecision. And at some point, like, we will get a breakout. It's just how and when and what. I thought, well, AI concerns, labor market softening. Now you throw Middle East conflict on this. It's like, yeah, that might be enough to maybe break the market lower. And it wasn't. Not yet. So I don't know, man. It's a crazy market right now to trade. But what I am doing is, you see me do this almost every single day, is like, we're in the 20s on the VIX. That's a pretty good spot to be selling premium. So project options edge, we're just getting some solid plays. I looked at the tracker this morning. I mean, I have $2,300 of income just sitting there on selling premium with basic one contract, ratio spreads. It's like, it's pretty safe, couple $1,000. It's not life-changing money, but it's like, it's pretty safe. It's 95 to 98% probability, 99.5% probability to profit. I'll take those trades, right? Okay, DPP is winning. I'm not annoyed. Yeah, you shouldn't be, right? Any masterclass plan for this week? I just did a masterclass yesterday in engineered options. How many of you are engineered options students that were in my class yesterday? We should have the class posted this morning for review. I put in I taught an entire bonus strategy. So if you joined me yesterday for class, we had a nice little bonus strategy discussion. We put in some more monthly trades. I'm going to keep those open for the month of March. Those are on SPX. And we have those set up where we're risking about $250 to make $250, or better yet, making up to $1,250. So we can make over $1,000 to risk $250, which isn't a bad setup on some key defense levels. So if you didn't have a chance to see it, I would encourage you to check it out. Again, our engineered options has been, playing a lot of defense, winning week after week with net profits. That's always a good thing, despite the market really, pushing. I mean, you see this, the market is pushing lower. We have lower highs. We have lower lows. I mean, this could be what the market is doing. Like right now, this is kind of showing range territory. And does this market have like this very organized correction? Maybe. If this starts to break out like I'm showing here, this could certainly get a little bit more accelerated to the downside, because the market certainly breaks structure and realizes, oh crap, support is maybe giving way, and then the market has a bigger flush. I still think that's an opportunity to buy the dip and whatnot, but we'll have to wait and see. All right. Eric says, I've been trading this zone up and down, doing very well until I didn't play out of the money enough. Had a big losing trade, still learning. Okay. Yeah, I mean, it's a grind. It is a grind. It's a grind. It's a grind. I looked at trades yesterday where I looked at a butterfly spread. I put this on double ups yesterday. So I did a 2-week butterfly spread out to the 65.50 area. I looked at a 7,000 butterfly spread. That's just too expensive. So I'd almost be willing to go 72.50. I actually want to look at that today. I'm just trying to think, do I go out 2 weeks? And is that enough time? Do I have to go to like the OPEX cycle on the the third week of March? But basically, I would say between 7,200 and 6,500. That might be a cheap enough trade where if this is like, I think we got into this trade yesterday for $1.25 and we can make up to, I think it's 50 wide. So I can make, 48.75 in profit on a risk of $1.25. So if I had something similar to this one where it's like maybe $1 to $2, let's say it's $1.50 and I can also make, 48.50. I don't have to be killing this trade to like, oh, I'm going to make $5,000, but it's like, even if I turn 150 bucks into 500, that's still a nice win. That's I could, win this one and lose this one, still make money. I could win this one, lose this one, still make money. And that's not a bad spot to like kind of play this area. Question is timing wise, like, either March 13th or March 20th are probably going to be the smarter expirations to get to. But I could also, I don't know. If I go out to the end of the month, I feel like there's going to be too much time on those butterflies. So we'll see. I mean, this thing could just be stuck for another week or two, but we'll find out. After non-farm, I feel like things can maybe break loose a little bit. Whether it's up or down, I don't know. So I want to look at that today. So if you're a double up member of mine, look for maybe a trade around the 7,200 handle. I'll look at that today and see if we can price something in to post that. So that way I've got a trade on the upside and the downside. And then from that point, it's just a matter of timing. Like I might go out a little bit longer to the March 20th and see if the market can get here in the next few weeks. But once we get through this first week of data, we get non-farm payroll out of the gates. Markets might open up the floodgates for moving a little bit. Cool. All right. Pinch point trade. I mean, Tom, we have a ton of trades already running on pinch point. A ton of trades. We've taken like 11 plus trades. So pinch point, if it's still popping pinched, I mean, it's just a matter of time. Usually I see a lot of these pinches that materialize in, maybe 2 weeks, 2, 3, 4 weeks. It's like, that's why I don't just trade short term on pinch point. I'm usually going out like 45, 60 days, want to give this thing like about a month to, get some direction. It's very rare to see something not move after like a 15 to 30 day window, especially on one of those big pinches. So we are still like pinched on the S&P. We're still pinched on the Dow. We're still pinched on the Russell. So that is all lining up to be like, at some point this market's going to be moving, and I don't want to fight that trend, whatever it is. So if we break to the upside, there's probably flows. I thought yesterday was more of a convincing break to the downside, but alas, it didn't hold. So we're still not confirming the breakout to the downside yet. But any daily close or weekly close outside of this yellow box, daily close or daily close, I don't want to fight that direction. So I think, just there's another thing we can kind of stack in some short-term trades to go with that. Even in daily profit play, we could be looking at daily profit play with some skew. We could go, higher delta puts and lower delta calls to try to trade the range. So there's all sorts of ways we can, make this work in our favor, right? Or we can just be simply, long and take advantage of that little breakout. Okay. How did you close out for a loser? Whoever my Zoom user is that sent me that message, did not get your DPP message until after 3:30 p.m. Okay. Well, when did I send the DPP message? So I sent the message at 12:13 p.m. Even if you got the message at 3:30, it was still a safe trade all day. If you took my trades, it was never even hit. So how did it turn into a loser? The strikes we took yesterday were never even tested. So, I mean, again, if you want to ask more details on that, send me an email, chrispulverpub@gmail.com. But, me sending a message at 12:13 and you not getting until 3:30, there's not much I can do about that. Like, that's you on Telegram, not me. But point is, our strikes were never tested. So I'm not sure how it was a loss outside of, yes, prices were going up yesterday, but they never threatened. They never threatened our call side. Yeah, I mean, that's not an answer. Don't know tasty trade. That's not an answer. I mean, you can't blame a broker. It's like, it's just open P&L. So if you're down $3,100, you're either trading a lot of contracts or you're trading a much wider spread than I am. So, I need some more information. I'm kind of here with your daily host and gumshoe. Like, give me information. If you want to send me the trade, send me the strikes, send me an email. I'm happy to take a look at it. But it works both ways. Like, you need to hold yourself accountable for the trades, the alerts. If you copied it exactly, our trade yesterday was not threatened at all. At all. So daily profit play yesterday was 68.80 on the call side. The only thing that would have been showing any risk was when the market was going up for the day. 68.80 was up here. Did price ever come close to it for the day? No. So the only thing that would have been maybe showing some risk is as price was going up through the morning, it would have been showing some risk, through that day. But again, I'm not going to sit here and fixate on this. It's like, I know the levels weren't threatened. I know I sent the alert out at 12:13 and we were up, 85, 9% of the max profit. So if you need some more information, again, send me an email. But overall, yesterday was a very textbook trade and a textbook winner. Okay. But I'm here to help. I just don't want there to be any confusion, So again, I would say if you're micromanaging that position, probably seems like it was too big of a trade size to not let the trade just be managed. And like literally, I cannot emphasize enough with daily profit play. You have to put the risk first. This trade is about risk management. If you are uncomfortable with the P&L swings in the day, you are not going to survive with the strategy because the risk side of this will make you emotional if you're trading too large. If you want to make $1,000 a day, you're probably going to have to risk 4 to 5K a day. And if that is a number that makes you uncomfortable, do not risk that much money. Instead of ever making $1,000 a day, make $100 a day. And you can risk $400 to do that. It's a very different mindset. And you won't micromanage the trade. You won't see P&L and have the sticker shock of I'm down $3,000. It's like, you just know that if price doesn't get above 68.80, I'm safe. If price doesn't get below 66.45, I'm safe. That's the trade. Okay. So it is sticking to the plan. It is knowing our levels, and it's knowing that what we put on the trade for risk is the most important thing. Because the mindset here is there will be the occasional bad day. On a 1 out of 10, there's going to be a day that doesn't cooperate, and there's going to be a day that the markets are above this blue line or below this blue line. And that will probably be a loss, or maybe I can play some defense and offset that a little bit. But, every now and then those days happen. But 9 out of 10 days, we are inside of this and we are making money. And so we have to show up and trade the next day. We have to show up and trade the next day. So if one loss is going to derail you from this strategy, then don't trade the strategy. But I can tell you from 1,000 members that do this with me and have logged over 500 winners, this thing works. And we make a lot of money. The model portfolio is up $84,000. Just in the last little stretch here, I'm even taking losses into consideration. I'm going back to, let's just go to the beginning of the year. Nothing crazy. It's like, it's $5,200 of profit in the last, 2 months of trading, and trading an absolute chop fest. So it's not awful, but we have to show up and trade, and risk management is the most important thing. Okay. All right. So, we're going to be slightly navigating lower. I think I measured like a 0.35 futures gap. So this will be down a little bit. I'll remeasure the upside. Still, I want to keep that plus or minus 65.10 in the head. I'm curious how, today plays out. So gamma wise, if we are getting into this gap area and falling, I think, an easy trade this morning is to stack up some call spreads. Just in case, and here's why. If the VIX starts to go higher again, if the VIX starts here and starts to go higher, I think the put side is going to be the hardest thing to defend, because this market might gun for a new low, right? We made lows. We broke these recent lows. If the market's going to, come up here and fill this gap and roll over, I think the easy setup trade is to sell some calls and try to get some premium just on call spreads. So I want to trade both sides of it, obviously, because the put premium is really juicy, but I do not want to be stuck in a trade where if the VIX goes back up today, little I guess ventilation in the VIX from 27 down to 22. Unless the VIX is going to get smashed lower, which it could happen, I guess. But I think the VIX might just stay, kind of bubbly around 20. So if the VIX goes up, I think the market turns over and maybe starts to threaten the downside a bit. So let's see where those deltas line up this morning on maybe selling some calls. As long as I'm selling calls above 6,900, which should be okay. Honestly, we should get some decent premium there. And I wouldn't mind throwing either bear call spreads and take a stab, or putting in a broken wing butterfly and see if we can get filled on a bonus profit as well. So, all right, we're going to be gapping up a little bit this morning. Let me get some real-time gamma here. Mark, I see you in YouTube, man. How are you? Nice to see you, Mark. I'm watching both. All right, so we open up around 30. I'm down just a little bit here. Okay, so open up there around 30. Let me get that plus or minus 65. So right in there, we had just a slight gap lower. So I'm going to go 65. There. So that's my market maker efficiency. I'm going to see if I can sell some calls. I'd like to be selling calls above 69.10, 69.15 if those gammas are decent. So this morning, 69.10 is a 9 delta. Doesn't look bad at all. So I can go 69.10 by 20. I'm going to take a stab at this 10 by 20. That's not a bad trade. I'm just going to get a buck out of this. Let me see if I can get $1 out of this real quick. This is a 10 delta. Let me try to place in a quick defense. Oh, man. That was sneaky. If I go 10 by 20, $10 by 20, 15 by 25. Get back up there to $1. Let's try 6,900. So this level, 68.80. Let me check some real-time gamma here. The defense trades, you can do whatever you want, Dave. Defense trades, I only do it for the peace of mind that if I get in trouble, I've got something to help me bail out. The defense trades are optional, right? I've said from the very beginning, all you have to do is focus on what is our standard daily profit play. You find your delta, you sell your call. You find your delta, sell your put. Create your spread, define your risk, and that's the trade. You don't have to play defense. The reason I play defense is because if I can get myself out of trouble and mitigate some of that risk, it makes my losses a lot more manageable, and I just keep winning. It's a lot easier to build back up. So defense is, it's not that I want to sit and manage the trade all day. It's because I know that if my levels are threatened, I've got something to maybe help me bail out. Okay, so some real-time gamma this morning. If we, work our way up into these higher gamma levels, that's 68.75, 68.80. I'd like to be selling above the 6,900 handle if possible. Let's see if we can get there. So still pending at that 69.10 by 20. If I went 05 and 15, let's see. I'm going to try this one for $1. All right, so I'm in for a buck. My trade is a 69.10, 69.20. I'm just doing the call side right now. I'm just doing the call side round of 69.05. What I get filled at? 69.05 and 69.15, just a call spread for today, just right now. So new order. Today is the 4th. 69.05, 69.15. Pulled that for $1 credit. Okay, trades in. I'm going to keep that one open for right now. I'm not going to add the put side yet. Not yet. So what I'm going to try to do here is, could I get a, let's look at our gamma levels. My extreme is around 69.10 is my VIX box. So if I do I mean, I could do the same trade 69.05, 69.15 and try to get that filled for like, that's a $10 spread. I'm going to try to do this. I'll go 10 by 20. So put on a 5 and 15. This one I'll get filled for like, let's try $8. So I'm risking 2 to make 8. And I'll do a 10 by 20 for, let's say, 750. So I'm only going to risk 250 to make 750. That way, if the call side is threatened, I at least have some higher credit, lower risk trades, and my block of resistance is around 69.05, 69.10. As long as price stays below this for the day, we're going to be pretty good. Okay, so I'm going to throw in a couple more trades here. These will be pending orders. I'm not going to add the put side for right now. I'm just going to keep the call spread because it's pretty decent. 3-4 expiration. So I'm putting in a pending order. So sell the 69.05, buy the 69.15, $8 credit. Pending. This is a $2 max risk. This trade should be break even above my DPP VIX box high. An SPX 3-4 expiration 69.10, 69.20. Putting that in for 750 credit. Okay. So going to play some defense. And looking at price right now, gapping up here and then flushing lower, we're probably going to see some very quick profit on our trade. Right now, this DPP is just a bear call. So DPP bear call is already up $40. Pulled in $1 is already up $40. If this thing gets up to very quickly like $60, $70, $80, we can just take the profit and move on for the day. Or let it expire because it's probably unlikely going to get there for the day and just take a full $100. Okay. Can I do DPP with a 5K account? Yes. Yep. Today's trade only took about $900 in buying power. So absolutely. Yep. Good. Getting filled at $1.05, Dave. Nice. Pete's in for the 5 wide iron condor. 69.05 and 15. Oh, you did a 10 wide. Okay. You're going 5 contracts. Gotcha. So 69.05, 15, 67.70, 67.60 for 215. Got it. Yeah, let's take a look at the deltas here. If I did VIX, let's keep an eye on the VIX this morning. So VIX is up a little bit. Let me drag this chart alarm lower and see if this is actually breaking above like 24. I mean 24.9 VIX. So if we break above that, we're probably making some fresh lows. If it's going to be another, just kind of indecision day on the VIX, then maybe an indecision day in price action too. It says my account doesn't have sufficient buying power. Make sure your contracts are correct. What trade are you trying? You trying this one? If you sell the 69.05, buy the 69.15. I mean, that trade only needs, if I get filled for $1, it's going to require about $900 of buying power. So if you have 5K, it should work. Nice. Managed to get $1.20 credit. Now waiting for quick profit. Okay, good. Yeah, we'll see. I mean, if the market works its way down here, here's the nice thing. The market works its way down into the gap or works its way into these, lower gammas around 6,800. I mean, we're all the way up to 69.05. Okay. So I'm not saying the market can't go there, but we opened up around 30. The market's going to have to go 75 points, which is greater than the expected move, which is that plus minus 65.10. So, again, on paper, we are sitting at a pretty good spot for a trade today. just doing the call spread. Okay. Why was I not taking this? Why was I not taking both sides of the trade today? Well, because this gap, if we are just going to run up and find this gap and then sell off, I think if I just sell calls, it's going to be tougher for the market to get to the upside risk versus the acceleration with the VIX going. If the VIX rips up to like 23, 24, 25 again today, the downside is going to become much, much faster. So I just didn't want to put the puts in the way. On the put side, though, I mean, and this is optional, but if I was going to sell some puts, I mean, there's 100% ATR at 67.15. There's our low from the gap lower yesterday at 67.09. If I'm going to do a put side, let's see like a low delta put. I don't mind looking at like a butterfly spread, but one of those like big fat $1,000 profit trap butterfly spreads. Let me see if that looks pretty good. So we've got some lower deltas here, 6,700s, pretty low delta. That'd be below the lows from the gap yesterday. Let me see if we have, I don't think I have any gamma to the downside there. My lowest level is 6,700. So if I could do like a broken wing butterfly down here, broken wing butterfly down here could maybe give us a profit trap. Again, that'd be a pending order, whether the market turns that hard or not. We do have the VIX box. VIX box is noted around a low at like 67.21. We calculated out roughly VIX at 23. Let's say the VIX spikes up here to 25. Okay. 25 out of 16. That's a 1.56% move. If we start from the close yesterday, 1.56%, that test lows around 6,700, 6,710. Let me see what a 6,700. So if I buy the 6,700, sell the 6,690, or even get crazier, go $1,500 and still risk, that would be 15 and 20, and try to get $1 out of this thing. So $1 credit. Make sure this is right. So if you're risking 400 to make $1, but I also have a $1,500 profit trap, if price gets a little gnarly and breaks those recent lows at 67.15, we might get this thing filled. I'm going to take this trade. So pending order, I'm buying the 6,700. I'm selling the 66.85 with 2 contracts, and then I'm buying the 66.65. So this is 15 wide, and then a 20 wide. So that's how I can set this up as a broken wing structure to get $1. It hasn't been filled yet. Price is going to have to fall for this thing to get filled. But if we get a VIX ramp up today, this thing gets filled for $1. It's trading at like, I'm talking like a 4 delta, right? So on paper, we have a 96% chance of profit on this trade. I'll take my chances with a $1,500 profit trap that we're going to be okay. Okay. So I'm seeing some comments like, so Found Treasures on YouTube says you're up 40, already up 70. You see me take the trade live. You can punch in the numbers right along with me if you're quick at your broker platform. Look, I'm not trying to get into trades with or without you. Like, I'm taking the same trade and I'm just talking through it. So you saw the plan. I talked about the numbers. I posted it at my broker platform, threw it in Telegram. The fact that I'm up, okay, fine. If you like the trade, maybe the 69.05 is not high enough. Or I'm sorry, maybe it's too high at this point, right? We're already sitting in good shape. That was a 10 delta, now it's a 5 delta. That's good for us. If you want to go a little bit lower, it's like, is it difficult for the market to get back to 68.80 today? Sure. So if you did a 68.90 by 6,900, you get 95 cents to $1 out of that trade. You can just lower the strikes a little bit and have a chance. Or you just take the same trade that I do and let it sit. Because if this trade comes back to fill, remember, 0 TTE is incredibly sensitive. So if the market goes up in points, this could still fill for $1. So, you don't have to chase my trades. I take them with you live. So yes, I got filled for $1. Some of you got $1.05, $1.15. That's better than me. But you can let it sit. If you want the trade right now, it's like, then you have to probably bump your strikes a little bit. You probably have to go like 6,900, 6,910, see what that offers. 6,900, 6,910. It's down to 55 cents. 68.95, 70 cents. 68.90, 85 cents. Okay. I mean, I'm following deltas here. It's like if I go a 10 delta from here, I can get $1 for a 10 delta now. It's not a bad trade, but it's like, okay, your strike is 20 points lower than mine. Doesn't mean that I'm right, you're wrong. It just, I think the trade's still safe, right? Price action right now is suggesting that, we're either kind of coming to fill this gap. If we break through this gap, remember I said 68.25. If we get below 68.25, to me, the pressure is more to the downside. And if this continues to go down, like our trades are going to be totally safe for the day. So it's just playing the game. Okay. All right. The other trade that I posted is a broken wing. I'll put it in here for defense. Those are pending orders. And then I'll put one more trade in for daily profit play. So pending order, put side, broken wing, SPX 3-4 expiration, buy the 6,700, sell the 66.85, and sell the 66.65 for $1 credit, $4 max risk, $1 upfront credit, and that's pending, and a $15 potential profit trap. Break even price in that trade would be 66.70. Be 66.69 before any risk. So we could fall all the way down to 66.69 if that gets filled. My probability of making $1 or landing a bit of a profit trap, would be pretty good. But price is going to have to fall. And if it doesn't fall, that's never going to fill. Okay, let's see what's going on here. Yep, I posted the butterfly there, Greg, and the broken wing butterflies in Telegram for you. I'm looking for $1 credit on that broken wing. I'm looking for $1 to risk 4, but I've got a $15 profit trap. It's in Telegram. Okay, David, you went 10 contracts accidentally, but you just closed out for a big winner, so good. That's as I say with the late Bob Ross, that's a happy little accident. Not bad. So good stuff. All right. So right now, up a few bucks. And as I said, in the morning, it's like if this gets up to like $75 or $80, $80 is probably good enough. 80 to 85 is great. Just take the profit and be happy. And I'll see what the rest of the day looks like. But we are just getting started. Okay. So 68.95 and my green line is going to be the 69.05, right? So my green line will be here because that's where I sold my calls today. I don't have a put side, but I will put my my put down to the 6,700 because that's where my broken wing butterfly is sitting. There. So if price cannot get to, let's say, 68.80, so if it's below there, we're in good shape. If it tests our expected move, that's fine. We're still above the expected move. That's with the gap. That's taking the gap into consideration. So we take the gap open, go up 65.1. That was a pre-market move. There's our expected move in blue. There's my call spread at 69.05. Richard says put trade 66.65. Yeah, but it's a combo, right? I'm buying the 60. So my put is just a broken wing butterfly. So I'm buying the 6,700 put, selling the 66.85 put, and selling the 66.65 put for $1 credit. Okay, this is the broken wing structure. So what that means is I'm putting on a 15 wide debit spread. So the 6,700 by 66.85, that's a $15 wide debit spread. And then the 66.85 to 66.65 is a 20 wide credit spread. That's what allows me to take the trade at a credit. Obviously, price has to fall for that to happen. Not happening yet. But if I'm risking $4 to make one, I have about a 96% chance of profit to make that $1. If price is down here near the end of the day, I have a $15 buffer for profit trap. So my break-even price is 6,669, which is, what is that? 45 points lower than this low here. That's pretty decent. I mean, that would be almost an entire expected move lower than the lows. So we'd have to have the market drop on the day. And again, anything can happen. But if the market were to drop to these levels and threaten me, we'd have to have a 1.7, even to the 66 level, which is my break even. We'd have to drop over 2% today in order for that trade to be in trouble. Oh, you're right. Sorry. It's a buy. Correct. You got it. Thank you. So it's a buy, sell, buy. Yep, you got it. Well, I don't know why I typed in sell. You'd think I've done this a few times. There. So it's a buy, sell, buy. Yep, it's right. Buy, sell, buy. It's in Telegram updated. Good catch. Thanks. Okay, good stuff. All right. For right now, I'm pretty happy with the day. We clearly took a stab at the call side, and let's see if the market is going to just kind of hang out here with the choppy VIX, or if it goes higher, we're going to be in great shape. If the market sees the VIX go up and the S&P goes down, then we're going to be in good shape for just the bear call spread today. Okay. If you're doing a standard daily profit play, like some of you are, Pete's probably doing it, Larry's probably doing it, Dave's probably doing it. Standard daily profit play, how's it looking so far? It's 21 minutes into the open. Price really hasn't gone much of anywhere. We opened up around 31. We're trading at 20. Hasn't really moved a lot, right? So far, so good. You probably need about 60, 90 minutes of time decay with the choppy price action. You can make some profit. Yep. So we'll just keep an eye on things. Okay. So, chart alarm on the VIX at 22. I'll set a chart alarm down here at 20. Let's just see if the VIX is actually going somewhere today. Sometimes the VIX just has those days where nothing really happens on the VIX, and therefore nothing really happens in the markets. We could be dancing around all day between about 6,800 and maybe the open. Maybe we just dance around here and have like a 30 to 40 point range. But this gap area, this may be support level. It's like, I could see that happening. Maybe 6,880 resistance, 6,800 support, and we're kind of staying within that market maker move. We shouldn't plan on like chaotic direction every single day, right? Even yesterday, it's like the market opened here and closed here, even though the market was down aggressively, up aggressively from the open to the close, it was within the expected move. Okay. This day, opening here, we safely traded it, but that market, I don't think was, what was that daily move? It had to be close. What was that move yesterday, on Monday? So Monday, we had an 81 point move. We still stayed out of the way because we're paying attention to our gamma levels. It's like, that's why we do this stuff every single day. Okay. Keith, how fresh is your account, man? How fresh is your account? Got to be pretty fresh if you're getting, verification, right? A week. Okay. Yeah. So, and maybe give it a couple days. So that's good. Dave's in the trade, set up my regular 15 wide, 3 trade stack. Very nice. Relative strength on NK futures. Katie, the daily profit play, I posted it in Telegram. All I'm doing in daily profit play is this. That's the trade that I got filled on this morning. 69.05, 69.15 filled. And then I put in pending orders because what I'm going to do is play a little bit more defense around those tops. So the 69.05 is the same trade that I took, but instead of going after $1, I'm going to put this other one in for $8. So if I get filled for $8 and $1, I'm in for a 450, which puts my break even at 69.09. That puts my break even at 69.09. I don't think that price today can come up above 69.09. If I look at my VIX box, it's around 69.13. It's like, it could happen. Obviously, it could happen. But it is so rare to see the markets come all the way up to my VIX box high. And, even if we overshoot and we come down to the VIX box low, it typically tends to stay inside of my VIX box for the day. So again, I'm not trying to overthink it. I decided this morning that if this is, a gap lower and the market spent all day grinding up yesterday, that today it's like, okay, we find this level and the market's going to say, okay, good enough. The bulls have had their fun. Now the bears are going to maybe take another stab at things today. And if they don't, then maybe the market just kind of hangs here in limbo today and nothing happens. But you have to remember, a typical day is much slower to the upside, right? If the market's going up, it's typically much slower to get up. It is slow and steady and slow and steady and slow and steady. And it's typically difficult for the market to exceed an expected move to the upside. But to the downside, as we have seen and as we know, the downside could be dump, dump, dump. If it's a really big risk off day, it can just dump. The VIX can rip all day, and there's not much you can do to catch that floor. So today I thought if I just sell at a high enough strike and stay out of the way, that way if the market is just using this as a pullback method to then sell back off, I don't want to be stuck on calling the bottom today. So this floor that I'm calling with a broke wing structure is saying like, yeah, come to me, come to us. Because if it does, we have to break the lows by 40 points. And if it does that, I'm still break even. So the day is just getting started. Okay. All right. Yeah, Greg, the VIX box, this is our daily profit light indicator. So what I built is this box is taking the live value of the VIX and dividing it by 16. So this is called the VIX rule of 16. What that means is you have roughly, I think you have roughly 252 trading days a year. And so if you take the square root of that, let me go 252 square root. So the square root of 252 trading days is 15.9. So we round that to 16. And that way you can take the actual VIX value at any time. This is why when I talk about the VIX every morning, I look to see like where it is in real time. I look to see where it was recently before we have the opening bell, because that value should be about the extreme of the day. And honestly, it's failed me once in 500 trades. And I was pissed about that because it failed to the upside. I was so angry. The market went up 1.64% with a VIX that was only like a 22, and it should have been, it played out like a 27 VIX. So like mathematically, I was pretty pissed that it's like, I've never seen the market be that far off in a 0DT trade. Yep. And that was that like big Friday surge. I think it was this Friday right here. This candle, that movement, we should have had maybe an extreme move about 1.25% based on the VIX calculation. And the market went 1.65%, was way above my strikes. And I ended up taking a manageable loss on the day. Now, I did have some defense that helped offset a little of that, but I still took a loss. And this is what happens. Look, I took a loss on the day because it was an outlier type move. And then 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12, 13, 14, 15, 16 winners in a row. That's what this course does. One silly day ends up giving you 10, 15, 20 days in a row of winners. So this is why trading and risking something that we're comfortable with, we just have to be we have to be determined. We have to be persistent. You can't let this is, look, I'm literally giving you a baked in excuse of an outlier move, because what do we do every single day? This market should 90+% of the time stay inside of our levels. Okay. We're looking at like an 80, probably 85 to 90% chance of profit every single day with our trades. So guess what happens 10 to 15% of the time? The market might go through this low or through this high. And when that happens, market makers have rolled a 0 DTE hedge, right? They are clearly getting order flows in that are wrong, meaning I'm not saying wrong. I'm saying that their positioning is going to be taking on risk and taking on heat. So what they do is they roll the risk to the next day, and they would properly hedge. And then the next day, they live and die by this. The expected move is greater than the actual. And after one inefficient day, they typically tighten this crap up for days and days and days of indecision in range-bound trading. And it's how we capitalize on it. So one outlier type day should actually get us more excited to trade the next day. But I will go back and say this again. This is why I have to emphasize the risk side, because if you take one loss in daily profit play, and it makes you think, I hate this strategy. I don't want to lose that big. You have to trade smaller. And you've got to manage that risk because it is easier to just make simple base hit trades every single day. And on the occasional inefficiency day, get ready to go maybe a little bit bigger the next couple of days. I don't mind. I don't ever want to take a loss. I'll be very, very frank. I don't want to take a loss. But when it does happen, I know what the plan is. The plan is to show up and trade the next day. My plan is to trade the next day and trade the SPX and trade the ES and trade, maybe the 15 and 10 delta and the 10 to 15 delta and get a little bit more aggressive because that bounce back trade is such a high probability trade the next day. Okay. All right. Yep. VIX rule of 16. Okay, good. Are you targeting to close the daily profit play at 20 cents? I mean, sure. 20 cents is fine. Like I said, it's good enough. 38, 37. I'm just watching intraday price action here. So real-time gamma, we are above I've got the 68.25 on. So for positive gamma above 68.25, is the market able to kind of run up into these call levels? Let's look at some real-time GEX. So for today's flows, I mean, there's a lot of call levels sprinkled in here. The biggest one sticks out around 6,900. And then put flows too. It's like my, high value level or my positive negative gamma pivot is 68.25. So above 68.25 is, the slow positive grind to the upside. Below 68.25 accelerates a little bit more to the downside. That opens up the 6,800 level. That's the big gamma for today, 6,800. If we break that, 67.80. If it gets really ugly, but again, unlikely that we're going to fall to 6,700 today. So if anything, we're probably going to be just kind of hanging out, maybe slowly grinding up to, maybe 6,900 today, maybe. But I hope it's just a slow grind. I mean, if we find this gap, okay. If we find the gap and then resist it, well, we'd be topping out today around 68.80. We measured the move right there at 68.95. We should be safe on the day. We should be safe. And if the market does nothing today, then that's even better for us because all we need is time. If the markets do this, all we need is time because time decay is our friend. In a 0-day environment, once we get to noon or 1 o'clock, if this thing is sideways going into the 12:30, 1 o'clock handle Eastern time, that's where all the fast time decay kicks in. That trade is probably worth, I mean, our dollar credit is probably showing, I don't know, 30 cents. And then later in the day, probably showing 20 cents. If you want to get out of the trade, I'd close it at 10. It's like, if I don't want to hang on to this thing all day, close it at 10 cents. And get out of that trade by, 1 in the afternoon, 2 in the afternoon. Okay. All right. So Roy, you good on that? I mean, 20 cents is fine. 15 or 10 cents would be great. If I just, get a little bit more confidence. I mean, here's an easy trade. If the market goes down, I'm going to hang on to this thing all day for $1. If the market goes down, I'm going to hang on to it all day for $1. If the market is choppy, grindy, breaking some highs, going higher, yeah, if I get out at 20 cents or 15 cents, I'm saying that's good enough. Take most of the profit. Okay. All right. Couple things I'd like to highlight here. So I'm thinking, let's see, we're good for daily profit play. We had new class in session on waterfall income. I want to take a look and see if we have some news trades. I know we have some earnings still sprinkled in today and tomorrow. Pinch point, we have like a dozen trades running right now. Engineered options, great masterclass yesterday. I would encourage you to check it out. We were live for like an hour and change. It's a bonus strategy, which kind of is right in the spirit of our engineered options. We keep winning engineered options week after week with the way that we structure the trades. I am losing on participation trades. I'm losing on break-even trades. These are the levels that we trade, but we are winning on the defense trades. And the way that we stack these in for the week, it is helping us make money. So like last week, the market was down. We still made money. The week before that, the market was down. We still made money. This week we're up and we're sitting at a break-even level. Project Options Edge, I just keep selling more premium. I'm going to keep doing that. What I'm thinking of doing here is if I build out, let me build out an order form. If I do not an order form, if I just do like a Google Forms and I do an Ask Me Anything. Okay, if I send out a Google form and I put in like just give me some questions. Like let's have a couple live sessions. I can do this on my YouTube channel, but this is a way for me to address, either anything service wise, anything market wise, and just have like a fun little ask me anything session. I do have a lot of emails to get through this week. It's just been a busy week. I mean, last week I was in Chicago, I was in Jacksonville the week before that. I'm sorry that I haven't gotten back to the emails a little bit faster. I've got probably, 30, 40 emails to answer this week. So just give me a couple days to get through those. And I'm also working on, I want to get kind of a digital marketplace going. I'm working on this in the background. Essentially, I'm going to give a digital marketplace where it's like all of my favorite strategies in individual guides. So if you like the credit spread, a guide. If you like the debit spread, a guide. If you like buying calls and puts, a guide. If you like ratio spreads, I just want to do those where it's like you can have a little bit of each one of these. And, just stuff I'm working on. That's why I've been a little bit more quiet on YouTube lately, just because I'm doing stuff in the background. And I'll tell you what's going on. But any rebuttals to this? Any objections to me doing like a Google form if I share it? Just give me some feedback. I just want to read through them. Like, what do my members need to know? What are we looking for help? How can I help you? Trade better, learn faster, make money while we're doing this all together. And if I build a little digital marketplace, I mean, that's going to be. I've got my own websites and stuff. I got Chris Pulver Trading. I've got the domain for it. I just haven't built out the website, but tradetobeprofitable.com. And anyway, I just want to get some stuff out there and put it in the right place. Katie says, speak slower. You know what? I think what happens is I listen to a lot of financial content over the weekends, and I'm typically using like a 1.25 or 1.5 speed on almost every podcast that I listen to. And I think that naturally just kind of I literally talk like this is hours and hours and hours of listening. And like the pace and cadence, I think, is like caught up to me where I know that I speak fast. All right. Google form, good idea. That'd be awesome. Just listening to beneficial repetition. One thing about using a crystal ball, sure. Good luck finding it. Okay. I mean, one thing about the way that I talk, I know that it's fast, I know that it's high energy, but we do the same stuff every day. We do the same stuff every day. Okay. And also it's like I don't like dead air. I mean, I'm not like trying to fill this session up with fluff. It's like, but I do try to make this like education, entertainment. Like I want this to be a pretty enjoyable session where there's not a lot of dead air. It's like, I mean, it could be very boring in my opinion, if I was sitting here like, okay, everybody, let's go ahead and put in this call strike here. And I don't know, it'd be hard to want to watch that every day. So that's just me. And, you're talking to a guy that also doesn't drink caffeine. This is like my natural energy for the markets, which is kind of crazy. VIX is going down. VIX is retreating a little bit, breaking some lows here at 22. And we are still not above the intraday highs yet, but setting a couple chart alarms. Let's see what happens. So does the market get back to this gap area? There's a high around 47 intraday, closed yesterday around 68.80. So keep an eye on that. Okay. Roy, love that because we started the book, How to Grind Out Profits. That's cool. I wrote a book back in the day. It was pretty big. It was like 200 pages. I think I did How to Blow Up Your Account the Right Way. Everyone talks about blowing up your account as like this rite of passage of, oh, that's everyone trader's experience. Like, not my experience. I was fortunate to learn from some professionals, but I never wanted to blow up an account. I took some losses. I learned about margin call by losing $3,000-$4,000 on a 20K account. That stung. I've taken I got hit during Brexit for a $30,000 loss on it was worth I don't know, 20. It was probably a 10. Yeah, at that time about a 10 to 20%, 10% loss. But it was overnight. And it took me I think in the next 4 months, I was back in profit, back in black. But I've certainly had my lessons along the way. But, this is why over 20 years of trading, 25 years of trading now, I've gravitated towards what I think has given us a fair shake. And this is why I like options so much, because it's essentially a calculated bet every day with price and time. Price and time. Have I read the book Best Loser Wins? I've not. I've read Liar's Poker. That's a good one for trading. That's a Michael Lewis book. And then also there is a Calculated Bets. I haven't read this one yet, but I want to get this book, Calculated Bets book. I think her name's Molly. Calculated Bets, computers, calculated choices of policy making. Gosh, it's a female name. I thought it was Molly something. Anyway, I'll find it. But no, so what's that one? Best Loser Wins. Why normal thinking never wins the trading game. Yeah, I mean, good old contrarian style. Tom Hogard. Yeah, I can pick that one up. Any Market Wizard. I mean, if you read the Market Wizards, that's always a good one. Jack Schwager's written, I think, 2 or 3 or 4 Market Wizards books. Their first 2 are great. They're all good. It's a profile of just traders that have figured it out. And some common denominator of Market Wizards to me is like they just have like a great win under their belt that like sets them up for success, and then they just preserve that capital, manage that capital. But it always starts somewhere. It's like they're crazy stories, but it's always like, yeah, I mean, it can be done. Anyway, I'll try to find that Calculated Bets book that I was talking about. Yeah, that's a go to Mark Douglas. It's psychology, trading the zones, trading psychology. Liar's Poker is a good one. That's entertaining for Michael Lewis. He's the same guy that wrote Moneyball and The Big Short. It's entertaining. He did Flash Boys as well for like the high frequency trading guys back in like the 90s and 2000s, laying out the digital fiber stuff for the internet. They were, if you watch the movie The Hummingbird Project, when you're trying to basically drill through the ocean or like trying to get these fiber optic cables laid so you can have the fastest data points to get you. I mean, HFT is nuts. When I did a conference in Melbourne, one of the guys I spoke with was an HFT. He was an HFT trader, so high frequency trader. And he was basically building like synthetic data feeds to get like fractions and fractions and fractions of trades and points and spreads. And his algos and quants would do like 100,000 trades in an hour. Like, I might be fast paced, but I'm certainly not taking hundreds of thousands of trades a day. So it's a whole new game that it's algos and quants that's way beyond what the human could do. Yep, good stuff. The one once you learn how to use tasty trades like riding a bike, yep, it's a good one. Agree, Rick. That's a good point. Rick says you need to be fluent in your trading platform to keep up. Yeah, I mean, but you have to remember that's what I say for everybody. Everybody needs to know, like, if you are not comfortable navigating a broker platform, you need to figure that out. I don't care who the broker is. I don't care if I was trading with Webull or Robinhood or Interactive Brokers, Tasty Schwab, Thinkorswim. Like, if I want to place trades and feel like I'm confident executing and managing, I want to be able to navigate that stuff. Like, they all have videos. They all have how-tos. Take 30 minutes and watch a few of them and get more comfortable and confident in finding trades and navigating trades. I will say that without a doubt, if I was using schwab.com to build my ticket and manage my trades, it's so much more challenging to put in every trade where it's like buy to open, sell to open, buy to open, sell to open, sell to open, buy to open. And then you want to close it. You have to issue that trade in a separate ticket and do the exact opposite. So if it's a buy to open, that trade is a sell to close. That's way more difficult than just taking a trade like this and then saying, okay, I took this trade this morning, I highlight it, I close position, and I can get out of the trade. Which one's faster? Obviously, the one that's like organized and I just click on close and I exit. That's way faster. So anyway, know how to navigate your broker platform. It'll again, you should never trade. I mean, you should not be trading blind. You should not be trading like, if I put this trade in, I hope it works. Like, if we have to manage a trade, we should be comfortable finding that trade and managing the trade. All right. Good stuff. Stacy, that's great. 2 weeks, get up to speed. Now I'm confident every day making trades. Also use option strat if you're new. Yep, for the visuals, that's great. Good stuff. Cool. Okay. Um, so yeah, I mean, it didn't seem like I had any objections to the ask me anything thing, which is fine. And then I'll get the digital content stuff. It's gonna be maybe a month or so for that, but I've got a bunch of ideas. It's more like I know all the strategies that I teach here. If I give like a little digital ebook or a quick guide or strategy book on all these different strategies, it's more like here's what I'm gonna do. I'm not gonna label them like, hey, this is my daily profit play. It's like you trade with me. There's the alert service, but the overall trade on something directionally neutral. I mean, if I have a book that's on up strategies or a book that's on down strategies or a book that's on neutral strategies or just the simple trade itself, one trade, there's an ebook, there's a digital guide on it, and make it very useful to use. And it's like, oh, that makes a lot of sense. Here's 10 examples in that book that say trading Tesla, trading Apple, trading S&P, trading Nasdaq, trading gold, trading whatever. It's just a calculated bet. I put a trade in for CSX. Okay. Thinkorswim, also use the Tasty desktop like Chris does. Tasty desktop is great. I like Tasty desktop way more than I like Tasty web. But it's interesting because I like Thinkorswim web for better execution, faster execution than I like Thinkorswim desktop. But then I like Thinkorswim web. I like Tasty Trade desktop. Just my preference. Chuck, here's your CSX. I mean, you put a put in, okay, fine. I'm seeing some overbought conditions. That's encouraging. This obviously has had a pretty good run. We're in railroads here, and year to date, this thing's up. Year to date's up 17%. I mean, is there a reason you're calling the top versus waiting for a dip? I mean, it's overbought on the weekly. It's overbought on the daily. If you're lucky to get this thing to pull back, it would probably be a buy and dip. I mean, if we pull back to any of these moving averages, this is what I'd be looking for. Do you have a plan on your stop loss? You just long puts. If it rolls over a little bit, I mean, there's a 21-day moving average, 50. I'm sorry, this is the 50, 100, 144, 200. That's all I'd be looking for. If it rolls over, I'd be taking some profit on any downward movement. I think that this is probably a good space to be bullish. I'd like to buy the dip. I mean, one thing in stock trading is this is good. This is good. I'm trying not to connect the dots on stocks and always short the tops. That gets you into trouble, man. That gets you into way more trouble trying to pick every top and bottom. So in the markets, if you have a good run, take your profit, wait for a dip or a pullback, get in again. Wait for a dip or pullback, get in again. Measure symmetry moves. If this is somehow tied to a symmetry play, maybe it is. I could see this as like a 3-wave move right now, just using some basic wave analysis. So there's 1, 2, 3. 4, I mean, this is what I don't like. 4, if I'm right on this, 4 is usually going to be like a pause or a subtle pullback. And then 5 is going to continue higher. So for me, bigger picture is this thing's probably heading higher. That doesn't mean bail on the puts. It's like you could have a pause or a little bit of a correction, but I'd be very aggressive on managing any profit. If anything, this pulls back to this area. That to me is a dip opportunity to get long again. And if I go low to high here, let's say we get a pullback. That is a 5-0. All right. Yeah, I mean, I could see this thing moving up to like between 50, probably between 50 and $55. So any pullback to me is a buy opportunity to get into the 50 to 54 level. That's just my outlook on it. Okay, good stuff. Yep, tasty tutorials are great. So you bought the 43.50 put. Cool. I mean, if you're in profit, like I said, I'm not sure what you're looking for as far as returns or how deep you want this thing to fall. But if I am correct in any type of wave 4 structure, wave 4s are not big pullbacks. Wave 4 is usually pauses, maybe a little bit of a pullback, but I still think this thing has room to go up, especially after the bigger picture showing that if this is a range and we just broke the highs, this is not something I want to be short on. This would be any type of decline is an opportunity to buy and go higher. So like I said, if you got some profit on your puts, I would just be protecting them. Okay. Let's see here. 6905. Let me get rid of the. So I'm gonna remove the 6905.15 and keep in the 10 by 20. That's going to be kind of my defense on the day is the 10 by 20. So let me update this in Telegram. All right. So DPP update. Keeping the following trades. 6905, 6915, dollar credit filled, SPX 3-4 expiration, 6910, 6920, going 750 credit. And then the put side, I mean, that broken wing is probably not going to fill. That is a working order. That's the 6,700. Now I've got a 10 by 20 filled for $1. All right, well, I guess I didn't cancel that one. So I got another trade filled here. SPX 3-4 expiration. Sell the 6910. Buy the 6920. Dollar credit filled. So I got 2 credit spreads filled for $1. Now I want to look at some defense opportunities. My VIX box is around 69.12 or so. So let me see if I can sprinkle in, now that I have these stacked up here. Defensively, I really, to play defense, I need to basically do a, I think I'm just going to do this. I'll do the 10 by 20 for a much higher credit. So I'll keep that 750 trade in. I'm just going to update this in Telegram. So I have the 6905, 6915 spread filled, 6910, 6920 spread filled, and then the 6910, 6920. I'm trying to get a higher credit for that. That would give me $1, $1, and $7.50. So that puts my break even around like 69.10, 69.11, give or take. Okay, we'll see how it turns out. Gamma wise, if we fill this gap, run into these smaller gamma levels, we seem to have a decent sized one right around that 6,900 handle. 100% ATR is 69.17. My hope is that the day is not just going to go up all day without selling into the close. I mean, we see this stuff every single day. So if the market's going to go, up, 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 that's beyond the expected move. My hope is that we are, fading back down to be within our expected move by the end of the day. All right, Chuck, you in profit on it right now or no? Your expiration is Friday. If you got any profit on it now, I'd just probably take it. If that was my trade, I'd take any profit I get, and then I'd just wait for a dip to buy and be long. Okay. So let's see here. So you got 10 and 20. That's a buy trade. I can go 15, 25, 40. $15, $25, and $40. I'm trying not to overlap my strikes here. Or I just do a 25 by 35. Or 30 by 40. All right, so I'm gonna play some defense with some credit spreads. It's in Telegram. These are the trades that I have. So filled for $1, filled for $1, and I'm keeping the 10 by 20 for 750. That would put my break even. That'd put my break even at 6917.50. I think that trade should be pretty safe today. But it could be one of those days where I'm wrong. Maybe. Maybe I'm wrong. Had the right idea, but I don't know. The day isn't done yet. So let's see what happens based on the gap level. Let's see what happens based on the expected move. That was the plus minus 65 that we have right here. So if the market, has a nice little inefficient stretch and then pulls back, fine. If it neutralizes, fine. If it threatens my levels, I'm going to play a little bit of defense and hopefully the market will close for the day under my green level. That's all I need. I need it to stay below my level. If it closes below the blue line, I'm happy. We're getting paid. If it pulls back now, fine. Looks a little bit better. Okay. All right. So chart alarms are set. I'm going to set a chart alarm here at 6905 as well, just knowing that's my level for call spread threat. I mean, again, just kind of using some technicals. I'm not trying to rationalize this thing, but it's like that level might mean a little rejection. This inefficiency might mean a little rejection. That's right around the expected move. So if the market at least responds to that and sells back off, that could be a pretty good setup for the day for us to stay safe. But we'll see. Uh, 10, 16, 25 were entered to trade HIG. What are you talking about? A specific trade or service? Hartford Insurance? Yeah, that would have been. Was that a pinch point trade there, Gerald? I would have been entering in here. Is that my trade? Let me look. It might be a pinch point trade. Let me see. Pinch point HIG. Yeah, we got a 120 by 125. It's not filled. The reason I put that trade on is because we have a pinch right in here. I was looking to see if the market was going to hit these moving averages. Because if we pull back to 120, 125, that's right back in the zone. I mean, to me, that's a no-brainer buy the dip. We'd be buying a 245 debit for a $5 profit, so we can make 255 risk 245. All we need to do is see if price can come back and find support. So it's pending order versus we're up here at the high. It's consolidating. I don't want to buy this thing. I don't want to buy at the highs. Like, look at how well this has behaved. Up to the moving averages, up again to the moving averages, up again to the moving averages. It's been doing this like clockwork. So that's why the trade was pending down here. If we come back to the moving averages, buy support, take it higher. How many hole-in-ones? I've actually, what have I? I've had two hole-in-ones. A lot of hole outs for Eagles. Lots of twos on par fours, lots of threes on par fives, hole outs from up to like 180 yards. But only two hole-in-ones. One of them was a par three on an executive course in Singapore. And that was actually kind of fun because I had the entire junior class with me. There's like 90 kids that we were walking the course with. And it was like a 110-yard wedge shot all uphill. You couldn't even see it. But when we all walked up, there was a ball mark like, I think it was 2 or 3 feet past the hole, and it backed up into the hole. So that was fun to have all the kids see a hole-in-one like hit, and they were all excited to see me pick it up. And then, and then the other one was when I was back in Michigan, one of the courses that we practiced for our playing ability tests for the PGA stuff back in the day had a hole-in-one. It was hole number 17. It's like 180-yard par three. Nice little draw, backspin into the hole. Watched it go in. That was kind of fun. Trump had 8, yep, but he's not Kim Jong Un. I believe Kim Jong Un has he's what, scored 18 in a row, 18 hole-in-ones on a golf course. Yep. Let's go. That's a good point. Dan says double up to the high. Yep. So let's look at that. So I put in a double up trade yesterday for the 6,500 zone, 6,500 zone. Let's go to SPX because I'd like to take a look. Again, it has to be cheap enough for me to take the trade. So if we have a breakout up to like the 7,200 zone, 7,250 area, let's take a look at that for double ups. So I went out to the 13th on double ups. Let's look at like the 7,200 zone. 7,200. If I went 50 wide, so I'm going to split this up. So this would be a sell the guts, buy the wings. How much does this cost me? Really? That is so ridiculously cheap. Let's go out another week or so. That seems so cheap. So the 20th, same strikes, 72 and change. So sell the 72, buy the 50. So that's 50 wide, right? 72.50, 71.50, and sell this one. Okay, that's a little bit more realistic. Okay, I'm going to put this trade in. I mean, the other one I'm in for $1.25. I'm going to get this one for $1.15. Give it a little bit more time. $1.15. Let's go $1.20. Should fill it $1.20. Come on. All right, in for $1.20. So basically, it's $1.20 risk to make up to $4,800. If we're ever, and again, it's going to be $4,800 at expiration. Perfectly pinned at 7,200, which is going to be very difficult to do. But I'll build this trade out. So double ups get a new alert. Just stand by with me. Double ups coming in hot. SPX 320 expiration. Buying the 71.50 call. Selling the 7,200 call. Buying the 72.50 call. $1.20 debit. So 48.80 max profit potential. Near expiration. Around the 7,200 handle. Okay, that way we have two trades running. So I'm going to build this out. So I just put these in for double ups. Let me build this out in option strat and show you the setup here. So build. I'm doing 2 butterflies. So I'm doing I'll build the call fly that I just put in. So SPX March 20th. And going up to 7,200. So the sell strike is 7,200. 50 wide and 50 wide. Okay. So 50 wide, 50 wide. It's a low risk, high reward trade. And then I also put in a put fly. So I'll add the buy put, sell put, buy put. And this was down to the 6,500 handle. I think it is 6,500. This one is a double up. This is another DPP bear call spread. So got 2 bear call spreads in this morning. And then here's my double up trade, the 60. Okay, I'll put this one in, and then the other double up is here. So that's the one I just did. That's the one I put in yesterday. So 6,550 wide. So let's go into the put side. We're going 65, which seems so far away now, but one never knows. And then 65.50 and 64.50 there. This has to be 2. There we go. There. Okay. So as you can see here, very low risk trade for basically 2 big fat profit traps somewhere between those breakout areas. So the breakout area that I measured is around 72, 72, 25, and 65, 6,500. It's between 6,550 and 6,500 to the downside and 72 to 7,250 on the upside. So basically, if price is right here and we are going up above, so number one, we have to get greater than 7,000. If we break above 7,000 with any type of momentum, the measure move is getting to 72 and change. That's why I put the pin right there at 7,200. That's a breakout that catches my trap. So if this market can give us a breakout in the next 2 to 3 weeks, I guess. The nice part is even going into this trade, it doesn't have to be near expiration, right? If we're, I guess even now, it's like let's go to next Friday. Okay, let's say we go to next Friday. So that would be what, the 12th? Friday, Friday 13th. Oh no. Friday the 13th, your closing bell. If I'm in this area, okay, my put side could be worth $200 and my call side could be worth up to $800. Again, this is roughly speaking, okay? So if I'm risking a maximum of $2 and I guess $2.30, $2.35 maximum, would $800 profit cover that risk? Yes. Would $230 cover that risk? It covers it. If price is falling, great. If price is rallying, great. If we're getting closer to expiration, okay, let's go closer to expiration. Obviously, the profit trap is swelling as we get the day before the day of. But as we know with these butterfly spreads, all of the magic is happening in the expiration window. Now, that's the most difficult thing to do with a butterfly is get it. This is why when I trade a lot of butterflies for my double up service, a lot of it is 0 and 1 day expiration. Because 0 day, you're gonna have the opportunity to see the profit trap for the day. If I'm out 20 days, 30 days, I mean, the most frustrating thing about a butterfly spread is I did the trade correctly, but my profit is a fraction of the max profit, right? And this is the one misnomer that people have with butterflies. They think it's, Chris, it's right at my pin price. Why isn't it showing more profit? Because there's still time in the trade. So if you want the perfect butterfly profit trap, it has to be expiration. The day of expiration is when all the magic happens. The final hour of expiration is when all the magic happens to your profit traps. That also means that it can be way slippery, way more slippery. Okay, look at see how wide. Look at how wide this is. Can everyone see the P&L width? I mean, there's way more profit to be had outside of my butterfly spreads. Like, I mean, if I'm within 100 points, I mean, if I'm within 100 points here, I get profit. If I'm within 100 points here, I get profit, and a decent amount of profit. So, I mean, instead of going 50 wide, I can go 100 wide, and still get enough to make, let's say 150% winner or a 200% winner. I make enough money to cover the cost of both trades and still win the net position. So the goal is on my trade for double up is if I have this trade and this trade running together, as long as they add up for a net profit, I'm taking profit on them. So net 125 and 120, I'm in for $1.45 max risk. I'm sorry, 245. 245 max risk. So if one is showing profit, so if one is winning, one is losing, as long as I'm showing enough to cover the risk, I can, take the winner off the table, take the loss off the table, and still make a net positive trade. I just see a price will go somewhere in the next, 9 to 16 days. That's it. And again, maybe I'm wrong. If price doesn't go anywhere, then I'm wrong. But that's a very small bet to make when, literally it's like I risk more than that every single day in daily profit play. So if one of these trades offers me $500 to $1,000 of profit, great. It offers up to $4,800 of profit. So if I can get $500, that's very doable. $1,000 is doable as we get closer to expiration. So we'll see what happens. You get on that, Dan? All right. Okay, very good. Let's take a look at our daily profit play today. So I'm up about $80 total today. Here's another thing too on the day. If since I'm filled on two trades, I did the 69.05, 69.15, the 69.10 by 20. I have two bear call spreads running for the day. If collectively these are showing me $100+, I'll probably just start taking the profit. I can make 200 on the day. If I'm up 100 to 125, $150, I'm just going to take the profit. Okay. So I'll keep an eye on that. Any questions on that? All right. Waterfall income. Waterfall income still looking great. I mean, we have trades running. We're 10% lower. We stacked in some trades through March and April. It's a busy service. But I think we're in it for the right reasons. Even if we have a pullback in here, like I said, the bounce at 65 and change, the bounce at 61.50 and change. A lot of our strikes are in this area for like the 6,200 or lower. So the market's ability to bounce off of there is probably pretty darn high, if you ask me. And what's going to be interesting, sooner than later is whether or not this market keeps doing something like this, where it's going slightly lower highs and slightly lower lows. If it starts to turn like that, we are likely, even though it seems very organized this way, it's an organized decline. It's an organized dispersion trade. It's I guess an orderly backfill of some of this crazy reflexive run we saw since the bottoms in April. And, this structurally, I think this looks very, very encouraging for the bulls to still step in and have a lot of support. What we don't want to see is something where this market just cracks all the structure quickly and then stalls here. If the market cracks to the downside, you want to see it come right back. But if it cracks and stalls, that's probably a distribution that's going to have more downside. So if it just, like I said, if it comes back in nice and organized, nice and organized, nice and organized, that's a pretty encouraging sign to maybe get like a 5% correction, maybe more, but 5 to 10% is orderly. And then from there, we kind of base out and work our way back up. We come back to highs, maybe go higher. If we don't break these lows, because it keeps getting freaking bought, if we don't break these lows and this just grinds higher, if we take out 7,000, there's going to be some momentum behind that move. There's my 72.26 that I talked about. Okay. I don't want to fight that trade. We could be very aggressive on bullishness there. I think that's a safe trade to be bullish. Okay. And obviously don't be stupid aggressive because it could fake out and go right back into the stupid range too. So it's just going to be like, keep taking calculated bets, right? Keep taking calculated bets. If it breaks out and goes, we should be able to make some good money here. I also think that if this structure changes, let's put a trend line in here. If this structure changes like this, it is hard to be a bear. Look at all this thing tested. Even the price action yesterday got back above this line. So we either have this key support or we have this sideways level that's around like the 6,800, 6,775 zone. If the market, breaks this recent decline, heads back up a little bit, maybe it starts changing trajectory. But if this structure goes sideways and rolls over, I'm telling you, I'm still pretty damn cautious in this market. Not to be a bear, just to be changing allocations, not being as aggressive. I mean, we can do daily profit play skewed here. We can do daily profit play skewed here. We see the market stay efficient most of the time. But it is literally like a coin flip type market because we don't know what this is going to do. The fact that we've had stocks all over the place and the indexes have been relatively calm and collected is probably a good thing. I think this has cooled off sentiment a little bit. I think any decline is going to be good to kind of eliminate some of the bull market speculation because it's crowded at the top. So a little flush there gives like smarter money a chance to buy a dip. I don't know if the market's going to give it to us. We're going to find out. Let's see here. Waterfall March 2, put those quarterlies instead of weeklies. I didn't do any. So what are you talking about there, Bill? Are you talking waterfall engineered options? Waterfall on the 2nd, we put trades in for the end of the month, right? Waterfall income. I did April expirations. So March 31st expirations and April 30th expirations. I stacked up those. We did our waterfall stack method. I did March 31st and April 30th. Yeah, I think I did 3 trades for March. I've got 3 trades for March. I've got the 10, 15, and 20% levels. 10, 15, and 20% levels. It's all on the tracker. Pending 10%, pending 15%, pending 20%. I stack those for March and April expirations. Yep. I need to change to weekly. Oh, you're saying for the end of the month? You're saying the expiration? Was there an AM? Is that why you need to change it? I only see. Oh, I see. So there's a March 30th weekly. There's a March 31st quarterly. That's going to be a Tuesday expiration. I see what you're saying. Yeah, it's fine. Like the 30th is going to be Monday. Tuesday is going to be the 31st. So we'll see. But yeah, I mean, again, they're still pending, so you can change them. Obviously, change them to what you want. All right, good stuff there. Um, let's see. ADP, we got non-farm on Friday. Today, I think we have a roundtable today at 3:30 p.m. Let me see if this is in my Telegram right now. I don't know if we advertised it yet. Maybe we did. Daily Profit Play Wednesday. Okay, let me see. Let's see. Where the heck is our roundtable? Pinch point, we already have a bunch of trades running. SN on pinch point, we have let's see here. 1, 2, 3, 4, 5, 6, 7, 8, 9, 10. I have 10 plus trades running on pinch point. I will take a quick peek at pinch point though. Let's look at our pinch point scanner. Get logged in, take a quick crack at it, and then Blake will play it. We'll fire up some waterfall income here in a moment. Like I said, I'll work on that order form for the Ask Me Anything. I just want to get some feedback, and then let's go pinch point. Take a quick peek at the dashboard. I also want to look at a couple of earnings prints. So this week for earnings, we have today after market Broadcom. It could be a good one to look at. Broadcom, Webull, American Eagle Outfitters, Cracker Barrel, a couple of just notables. Thursday, Kroger, JD.com for China. Billy, Costco is Thursday after market. I mean, not a ton, but I would say Broadcom would be a good one. AVGO, let's price that one out this morning before we go. Costco, maybe. Costco's over $1,000. I'd love a split on Costco. I mean, I've been a Costco member now for like 6 or 7 years. People, either love it or hate it. I'm sure most people love it. I just stopped going to the stores because I hate impulse buying. So I just get the crap I need online and get it sent to my house. That's a lot better for my wallet than going to the store and it's like, ooh, look at how cheap this is. Ooh, I didn't know I needed that. And you just add a bunch of crap and it's like impulse buy. So get what you need, buy online, and save some money. But Costco's pretty sweet. Anyway, we'll take a look at that. Let me get a screenshot here of Costco and everything else. Now look at pinch point. So let's go pinch point. Let's price out AVGO for newsbreakers and take a look at some more earnings. So this is the earnings setup. So we already had before market open today. So Broadcom, I'll price these out, look at some flows, anything tomorrow, and then maybe Costco. But for Friday, not really interesting. I'm trying to get maybe Wednesday, Thursday, see where prices are stacking up for some earnings setups. So let's go pinch point. Here's the scanner. So we have 41 in the go zone. Wow, look at this. Go zone. Look, this is so nuts, man. I've never seen this. I've never seen this. I've never seen multiple indexes in a go zone. I mean, again, like timing is everything, but I swear like something big is happening. Eventually when this market is ready to go, it's going to have some momentum behind it. Like this is going to be like a pretty big breakout. it'd be hard to see this thing fail continuously. It's like we're stuck between 7,000, 6,800 S&P, and eventually when this breaks, like at the very least, measure the move right there. At the very least, measure the move right there. Right? Like that's 100% breakout. That's 100% breakout. Like I don't want to miss that direction. And this isn't something I necessarily want to trade, zero DTE outside of some bias. But if it breaks out, I would just do like a 1 to 2 week debit spread and to see if you can capitalize on that move. A 1 to 2 week debit spread, see if you capitalize on the move. That way, you might have some asymmetry there, maybe. But that's why I've got the butterfly spread up at the top and bottom. That's cheap. That's cheap. I just don't know if it's gonna pay a ton. So all right, other stocks. That's a lot, man. 40 is a lot. Let me see. So liquidity wise, I'm going to go Nasdaq. So we have KHC, which is Kraft Heinz. That's not really a high beta stock. REGN, I think that's Regent something. Is that a REIT? Regeneron Pharma. That's pretty pricey. I bet their spreads are 10, 20 points wide. I probably won't take that trade. And then KHC is Kraft Heinz. I've talked about this one in the big picture. Like, I don't mind just, putting in puts. I'm watching this. This is a COVID low. It's like, I'd love to sell some puts around $20. It's probably not worth anything because it's such a cheap stock, but Kraft Heinz, playing some defense, January 2027. Could I sell a put? I mean, I could get, what do I get here? Not that exciting. If I want, what's the dividends on Kraft Heinz? Anything? Dividend 6.61. Okay. I think for my this is not a newsbreaker trade. This is more like just get me paid. 22.50, $20, 17.50. I get $337. Break even price would be $20, I believe. 17.5, 20, and 22.50 divided by 3 is $20. I'd have a break even at 20, and I'd subtract 337 by 3. So I'd own the shares at 1887. Am I willing to own 300 shares of Kraft Heinz at 1887? Yes, because that's below the COVID lows. Couple things, right? If price goes up from here, there's no assignment, I make $300. If I get assigned, I own it at $18. There's some upside potential, even if this has a similar low to high rally. If it's low to high, let's say I get 6.6% dividends and my price goes up from $18 ownership up to $42. That's more than 100% on a gain, in addition to a kicker with a dividend. I don't see that as a bad trade. It's not something I want to trade on earnings. It's more like, let me just sell some puts. So I'm going to take this trade. Let's see if we can get like 350, 345. $345. Okay, I'll try to penny this thing down. 340. As long as I get over $300, I'm totally fine with the trade. So let's go 340. Excuse me. 340 not filling. Try 335. 335 got filled. Okay, this is going to be a Project Options Edge trade. If you're interested, Project Options Edge. I'm selling 3 naked puts. 335 is getting filled. That is so $20. It's 6K tied up. I'll just do this. Yeah, this isn't a bad one to do on. So it ties up $5,600. I feel like there's better ways to tie up my cash. I think I'm just going to do this on my margin accounts for right now. If I'll probably just look to buy shares like individually. I'll buy shares and maybe do like a synthetic long versus tying up the capital on a cash account. So I'm gonna do this for margin. Okay. Okay. Almost there's a couple more counts. This one pending 334. Come on. All right. So 333, 334, 335 are the fills. It's a 2250, 20, and 1750 naked put combo. So throwing this in for Project Options Edge. This is trade number 116. KHC. Expiration, I'm going the Jan 15, 27. Selling the 2250 put. Selling the 20 put. Selling the 1750 put for $3.33 to $3.35 credit. So it's a naked put combo. Probability of profit around 68%. So that's not great, but I would say COVID lows. COVID lows at, I think it was 19 and change. COVID low around $20. At $20, I don't mind being assigned and long this stock for 6.61% dividend and major support potential to, $30 to $40 price targets. If price rallies from here on value, no assignment, and we'll keep the credit. If assigned on all three levels, break-even price is 1887. Okay, trade is posted. All right, good on that. Chat's up. Chat's up. Okay, so new trade on Project Options Edge. That was trade number 115. Today is the 4th. Jeez, fat finger trades today. 1/15/26 expiration. Sell the 2250 put. Sell the $20 put. Sell the 1750 put. And 335 credit. in, no, and in. Cool. Okay. Splitting itself up. Maybe. I mean, to me, it's just a trade. I mean, hopefully we're not putting ourselves in too much trouble, but it's been in a downtrend. As far as like the defensive trades, COVID lows, staples, defensives, things like that, it's doable. I think Simply Wall Street has this thing on like the $40 to $50 price target. So KHC, I mean, Snowflake looks decent. Estimated values, earnings forecast to grow. It has a lot of debt. That's probably the biggest thing. I could see the dividend getting chopped down a little bit, but it's probably reliable. It's just maybe going to be fluctuating as far as percent. But I mean, debt's not a great thing. It's just what do they refinance? How do they restructure it? Price to earnings, price to sales one time. I mean, cash flow value, discounted cash flow, $60. I mean, would I love to see it go to $60? Of course. But even $30 to $40 price target, if I own it at 18 and change, $19, and it goes to 30, I'll take a $10, $11 pop in stock price with a 6% dividend. That's not a bad run, right? So not being super greedy. It's essentially like, if I get assigned, does it go up by strikes, make me some money on the price appreciation because we're bouncing off of these lows? And do I get a kicker on top of that for holding it? Not optional. I mean, they'll if they split, they adjust them. If there's a split, and I mean, I don't know how you're going to split unless you do like a reverse split, which I don't see happening. And if it happens, they adjust it. I mean, these options don't just go away. Like if there's a 10-to-1 split or reverse split, I mean, I guess like a 4-to-1 reverse would bring this price up to like $100, but unlikely. And if they do, then they change my option strikes. I've had that happen before with stocks that split. Like that's why I'm hesitant to take a trade on Costco, because like if Costco does like a 10-to-1 split and the $1,000 stock goes to $100, I'd much rather trade those. But it's going to work out the same way. If I did a $1,000 buy call and they do a 10-to-1 split, it's going to change my strike to $100. So the options market will adjust for those splits. All right. So there's that. I would like to price out a couple of earnings. So pinch, pull this over here. Let's see what we have for some of these individual stocks. So after close today, Broadcom, what's coming in on the tape? A lot of March flows into bullish territory. I mean, a monthly call on AVGO seems decent. I don't know about news, but AVGO. I mean, we're sitting at a pretty good spot for earnings. I mean, if it's cheap enough, maybe just a bull call spread. I don't think it's a terrible idea. It's like if they have solid earnings, they beat. It's this week. I mean, it's kind of binary, right? What's an AVGO bull call spread? Couple ways I can trade it is just go at the money and try to get an asymmetrical setup. All right, we're hitting 68.80 fresh intraday highs. All right, so March 6th is Friday. We have earnings plus or minus 2270. See what the percentage is there. 2270 out of 322. So about a 7% move. And average move is about 11. Interesting. So the average move is about 11%. I mean, technically speaking, it's sitting right at support. Here's two ways I want to play this. If I go, for 250, I mean, if I go at the money, there's my trade. If it goes up on earnings, I pay $1.15 to make $1.35. That's not a bad trade. The other side of that would be I go down to the expected move and buy the dip. So if it goes up, I mean, this is a pretty cheap play. For $15. If price goes up on AVGO by, I mean, it's what is it, Thursday earnings? Or is it today? Today after market? Today after market. So by Thursday, Friday, what happens? I guess we'll see, huh? I mean, it's at support. Couple ways I'd like to play this. If I buy this and it goes up, that's an easy winner. I wish the expected move was greater so I could do a calendar spread if this is a bit of a dud earnings, but if it has some excitement to it. I mean, recent lows. Actually, you know what? Let's structure this a little bit differently. Let's go a little bit differently. If I go, recent lows at 307, recent low here at 296. Let's see if we can go 97, 95, and 90. Maybe this trade. So it's not like I'm getting excited. This is kind of what we did on those IGV like software trades is like, give me a credit, give me a profit trap. If price goes up, I make $20. I'm not stoked about $20. If price falls, I've got a $270 profit trap just hanging out there at the lows. I wish this was offering more credit. Maybe that trade. So I can make, 45 to $50 on the trade. 297 break even puts me at 295. Are we hitting the lows? That low's 296. That would be in the profit trap. It's a 250 profit trap. See if we can get 50 cents in this one. Or maybe I go a little bit wider. Now my risk is slightly bigger on that broken wing structure. I still give myself a $250 profit. Yeah, that was my concern. This one's not bad. All right, I'm gonna look at this trade here. So let's go a little bit wider. 62 cents, profit trap at 250. I'm gonna take this trade here. I'm gonna go $60. Let's try to get 65 cents out of this thing. And I've got a 250 profit trap. 65 not filling. I'm going to penny this down. As long as I get $60, I'll take the trade. Come on, you turds. How's this not getting filled? Isn't AVGO a top 10 company for crying out loud? All right, 55 final offer. If I don't get filled, I'm not taking the trade. 56 final offer, 55. Unbelievable. That's ridiculous. So I guess maybe, and again, I'm kind of pressing against my own boundaries here, but $50 minimum is what I want in this trade. 53, 52. Come on, man. 53 got filled. Jeez. All right, here's the deal. So I got filled for 53 cents. It's going to be a quick $53 if I'm right. There's no upside risk on this trade. So here's the trade. Putting this in for option strat. I'll put this in for newsbreakers. This is a broken wing. So AVGO to the 6th. And I'm doing the 290, 250. Yep. So 290, 250. Selling the 290. And then splitting by 5. 280, 250. There. So that's my trade. So I got 53 cents on the tail credit. So this is 53 cents credit filled. So there's no upside risk. And then I have a $2.50 profit trap for Friday's expiration if price is down below the expected move. So, I mean, realistically, I think the trade should be fine. We'd have to go below the expected move. We're doing like a 14 delta. We'll see if it's enough. Like I said, there's no upside risk. So if price is up, it's probably going to be an easy $50. Okay. So let's get this one posted for newsbreakers. All right, that's going to be trade number 115 in Newsbreakers. AVGO 3/4 is the entry date. We did the two. Okay, AVGO 3/6 expiration 292.50. 287.50. Oh, 282.50. So 53 cents credit. Okay, so it's a broken wing butterfly. The way this trade will work, copy this, throwing this in member Telegram. Where are you, Michael? So I have max risk on the trade is 447. Max risk, 53 cents expected profit with up to, it'd be 250. So 303, 303 max profit with credit plus profit trap at 290. Okay, trades posted. So AVGO right here, 1, 2, 3. Label it newsbreakers. 53 cents. If price goes up on earnings, there's no risk. I get paid. The only reason I'm not taking the at the money right now is the recent lows have been 307. The recent lows at 295. So I'm just looking at the option chain. There's no upside risk. If it stays flat, no upside risk. I'd prefer to do a calendar spread on this trade, but unfortunately, the broker's expecting a 22-point move when the average move in earnings is usually 10.8%. And so when we have like 10, 14, 15, 16, 12 point, it's like we have greater than average moves here. And so I don't want to do a calendar spread where I want that vol crush. And if it goes greater than 10%, I'm kind of busted up because the broker is showing about a 7% move. So anyway, I mean, it's sitting at a 280 moving average. It's a pretty good trade. I just think if I'm playing the safety net, which is we hopefully don't break the lows. If we're hitting support here and we go up, that's an encouraging sign to head higher, and there's no risk. We just grab a quick $50. Okay. All right. So that's posted for newsbreakers. Okay. Before we go, Blake's going to play us with some live stream on Waterfall Income. Trades are still valid for this week. You're welcome to jump in. There's like 6 open trades that we put in this week. If you want to follow along, the class is posted. Engineered options. If you're in my engineered options service, we did a masterclass yesterday. That classroom should be posted as well. And check out that class. It was a bonus strategy. We also put in new monthly trades for engineered options. Cool. All right. New trade on Project Options Edge for KHC. Daily profit play before we go. How are we doing? Probably fine. Up 50, up 65. I'm up about $105, $110 on the day. I don't mind taking the profit. My max profit is $200. I got filled for $1, $1. My max profit's $200. If I'm up 150, I'll probably just take it. So right now, like I said, about $100. I'm toying with the idea of just taking the profit, moving on. Grabbing $100 doesn't kill me, but a little bit more decline, a little bit more downside, or just like even choppy here and more time is going to help me with my trade. The expected move right now is 69.05. If we look at the option chain for today on SPX, 69.05 is trading at an 8 delta. So there's a 92% chance that we stay in this profit. That's an encouraging sign. So if price falls a little bit, our out of the money percentage gets increased and our delta gets smaller, which gives us a higher probability of profit. Okay. So I'll keep an eye on that. Like I said, if I'm showing 125 to $150, I'm probably just taking the profit on the day. How's everybody doing? If like my how's Pete doing? How's Dave doing? How's Larry doing? Who's doing my daily profit play just standard? I mean, price surprised me a little bit to the upside, but it really my price action was what did we do? We came back and tested the gap and then went up. So I mean, clearly the market is kind of loving this buy the dip stuff. We're in positive gamma for right now, but we are stalling at this resistance point for right now, and we'll see if it gets contained there for the day. Only up 20 cents. Yeah. I'm curious, where was your call strikes? Is it the call strikes that are struggling, Larry? Dave won 3 winners. Nice. Close for 70 profit, Brett. Okay, no worries. Yep. I'll hang in there. I mean, like I said, over $100 is fine. It's fine. I'm not excited, but it's fine. It's it could be worse things. Is grabbing a fresh crisp $100 bill today is I don't think anybody's gonna get pissed about that. So I should just take the profit and be happy. And I might. let me just do it. So if I grab, let's see if I can grab 45 out of this one. So close this down for 55. And close this one for 40. Or 35 even. So I'll set a couple take profits in here. That would give me 65 and 45. That'd give me $110 on the day. I'll look for it. So I'm going to set some take profits and try to scrap, $110 is fine. $100 is okay. $110, $105 covers my commissions and fees. And so, if I get 105, I'm making $100 on the day. All right. Randy says, filled at 90, now showing 55. Okay, good. You're in both DPP trades. Good. 68.95. You up a little bit tighter on the call side. Got it. So this is a call side that's holding you up. Cool. Okay, all good. Let me see if I can find I thought we had a roundtable today. I think we're doing a roundtable today at 3:30 for closing bell. It's probably going to pop up in my Telegram. If not, I will find it. If you'd like to join myself and Nate and Kane and Jeffrey and Alex and a bunch of other people, I think we're going to do like a kind of emergency roundtable and just kind of assessing this potential war situation, geopolitical escalation, and just talk shop for about 30 to 60 minutes. I'll see if I can find a link and post that in my public Telegram. Okay. On that, we'll wrap it up here. So let's go waterfall income stream. I'll get the Google Forms out hopefully in the next week on Ask Me Anything. Working on the digital content for just grabbing some quick strategy guides on some favorite trades, and probably just going to blast that everywhere. It could be on my website. I've got a couple of the services that want to grab that stuff as well. We'll put it on Trading Pub or Prosperity Pub homepages. It'll be some front end stuff that we do, but it should be, so the roundtable should be today at 3:30 p.m. Should be during like closing playbook. I think that's when we're slotting it. All right, SPX just filled for 55 cents. So that was a $45 grab. The other one I'm trying to get filled for 60 to $65. That's 45. We're at 35 right now. If I grab this for 40, I'm just out of the trade with $1.05. It's trading at 35. That's the mid. I'll change it to 40 and grab my 105. All right. So I'm out for the day. $105 on the day. Quick, no risk. Canceling my defense trades. That one I'll keep. That one I'll keep. Broken wing put I'll keep. But the call spread 69, 10, 20 I'll get rid of. So I'm going to cancel that trade. That way I have the broken wing put fly. And I'm doing the higher call spreads, $5 on a 10 wide. That's unlikely going to get filled, but I'll keep those there as defense at the 30 and 40 if needed, but doubtful that the price is going to get there. If you're hanging in there for the rest of the day, these are probably going to be winners. So this 40 cents is probably going to be worth zero. And this, the dollar worth zero, the dollar with zero. I mean, more than likely, I wouldn't be surprised to see these both pay full profit today. So if you want to hang in there and go for, the $200 max profit, you want to get 150, 160, 175. You just need more time. You want to hold it all day, then give it a chance. But I'll take the $105 and be happy. So we'll take the win. Okay. All right. Chuck, there we go. Finally figured out how to close out CSX trade for small profit. Good. So you're not holding that put on a what I see as a potentially bullish trend. Just wait for a dip. Good stuff. Pete says joining the Nate and the gang 3:30 today. Share my outlook. US dollar. So Pete, you're joining them? Oh, I did? Okay. I didn't see that in Telegram. Where's that at? Oh, there it is. I just didn't see it. Will you be joining me? There's no link to join. Nice. So it is there. Yeah, I didn't post that. So I don't know. I try to make it pretty obvious which ones are mine. Like if you have a link in here, that's my marketing team. If you have, you know, a fancy little thumbnail and some news or some outlooks, like any hyperlink is not me. You know, that's the marketing team. I try to post a lot in here, but I'm probably outpaced, maybe 2-1 or 3-1. Like this is me. I posted that, right? Anything that has a link, that's the team. I posted, geez, man, they do post a lot of shit in my Telegram. I posted this. Anyway, I'm sorry that I don't want it to feel like markety or spammy, but that's why there's 2,600 followers for free. So they kind of control a little bit of the marketing side, but that's why I have member telegrams that I post all trading stuff. Anyway, it is what it is. Okay, good, Chuck. Pete, I thought for a second you were joining the team. I'm like, cool. We got a new trader. No, so I'll be joining them today at 3:30. I'm just looking for a link for it. So I'll try to share that out. It should be the closing playbook we're using that session, do an emergency roundtable. Did I share the AVGO trade Telegram? No, Grothry, it's in my Newsbreaker service. So Newsbreakers is my trade on AVGO. Little Broadcom. I'd say most likely it's going to be a $50 winner. And if it comes back to test the expected move, then possibly a $250 profit trap would be good. Cool. All right. I'll let you go. I will stand by, answer questions. We'll be here live. Blake will fire up a little live stream. Definitely not the same, Pete. I agree. There is a balance between trading and investing for sure. In fact, I was just talking to a friend of mine yesterday that, he's talking to me about his retirement account and then talking to me about doing, the daily profit play type stuff. And I'm like, well, that's a very different outlook. I would say one allocation would be to trade daily profit play. The other allocation would be, you ignore all the noise, you stay in the markets, you invest at dips and pullbacks, and you just have to like tune out that the market's going to be a little wild and crazy and volatile. But big picture, it's like it's designed to go higher. So investing is very different. I tend to run a pretty simple portfolio for my clients where I keep a pretty simple mix like SPY, Qs, Dow, Russell. That's my equities mix. And then gold and silver. That's my, metals and kind of safe haven mix. I've got a little bit of Bitcoin that I wish I would have trimmed some of the exposure last fall because it would have saved me about 12% for the year. My alpha was up. Like my accounts reached like 41% year to date last year in like October. And I was pretty stoked that was going to be a nice return for the year. When Bitcoin turned, I started like selling calls, trimming positions, lowering my cost basis, but I still maintained exposure. And it's not a lot. It's like 3 to 5% from managed accounts, but that 3 to 5% in a, 25 to 30 to 50% drawdown, I sold a lot of premium, which helped me kind of wash away some of the risk, but it didn't get the gains back when Bitcoin is up, 25, 26% for the year. That was enough to kind of help me generate that extra bump in my year to date. So net, my returns for the year, let me see if I can find this. This is one thing I show for clients. Let me find it here. Let's go. This guy. Oops. So this was my year last year. 26.99 year to date. So not terrible. Month to month, I was pretty discouraged with like basically break even for the final quarter, like October, November, December. But if you look at when the market topped out, we didn't really have a lot of gains. In fact, we've gone pretty much nowhere since the last week of Thanksgiving into the first week of December. The markets have essentially treaded water. But the positive thing is all of the fluctuations in the VIX has allowed me to sell a bunch of premium. So I'm already sitting on close to probably close to 8% for the year on just extrinsic value. So if prices just kind of stabilize in here, we ultimately go higher, like the portfolio is easy for 2026. But anyway, I mean, it was a decent year. It's like I beat the benchmark. I had about, like I said, 41% was my top year to date. I was stoked about that until Bitcoin turned over. But I managed. We still came in reasonably well, and we're fighting a good fight as always. So never a dull moment. Longer term trends, mainly defense, infrastructure emerging. Yeah, man, good stuff. There you go. Metals versus equities. I'm probably like 60, 30, 10. 60% equities with that mix. So SPY, Qs, Dow, Russell, 60% mix. And I'll dial that up or down. I also play options on everything. So I'm usually, hedging that 60% exposure. So that way I don't have to go from like 60 to 30 or 60 to 20. But it does help to, trade options around things to generate income on the own positions. And also, hedge to the downside a little bit to trim off some of those tail risks. And then metals exposure. I go back and forth on metals exposure. I don't mind the like 10%, 10 to 20 is, I think, pretty favorable. I mean, I ultimately want more gold than anything else. I think silver is great for speculation. Silver's had an amazing run. Silver was a huge like alpha generator for me the last 3-4 years. But ultimately those profits in silver are going to make their way into gold. Gold is going to be like my, pure allocation would be gold, but I'm putting silver in as like speculation because now it's not just, poor man's gold. It's actually strategic. There's an AI use case for it. And I think we need a lot of it. So, I mean, the demand for silver is more than what's taken out of the ground, and again, I'm not chasing gold and silver, but I think there's a time and a place for both of them in the portfolio, and 10, 15, 20% allocation seems fair. And then Bitcoin, I'd like to say Bitcoin, I'll dial it up between, 3 to 5%, maybe up to 10% if I'm really liking the confirmations. But as of the deleveraging we saw in Bitcoin last year, Bitcoin is very much a trade for me. It's not a diamond hands, it's not a YOLO. Like, it is a risk appetite trade. And I do think that there's a decent AI case for Bitcoin. I just think that the crypto stuff needs to probably flush out all the bad actors and all the crap and all the scams and just needs to be deleveraged. That's what last year was. And so I think the purity, and I mean, the problem now with Bitcoin is it's essentially tied to the markets. I mean, when you put BlackRock and Fidelity and JP Morgan, they're all saying that, here, we're gonna launch ETFs. We're gonna allow our clients to be in Bitcoin. It's like you're putting it right in line with just basically passive investing. When you're doing, financial engineering like Michael Saylor did, Tom Lee did with Fundstrat with Ethereum. I mean, you're adding derivatives of a debt on top of an asset that's already volatile. I think that's why the market started to dump, and it's like this debt spiral, or this death spiral of just flushing out a lot of the leverage. Ultimately, I think there's a purity to Bitcoin, the network effect with Ethereum. So that's probably the only two I really focus on. My days of trading Litecoin and Solana and all this other shit, it's fine, but I'm out of those trades. I've been out of those trades since post-COVID. Like, those were good trades. They were not good investments, if you ask me. I'm pretty much kind of pure in like Bitcoin, Ethereum only. That's all I really care about. Never got a chance to cover oil. Yeah, I mean, I'm looking for oil to do this, and then we'll wrap things up. Oil. I just drew a fib. I thought I talked about this earlier. There's my low. There's my high. So I want to see oil pull back. Okay, if it pulls back, I'm going to do a defined risk spread, probably a bull call spread, maybe a broken wing butterfly, maybe a 1-1-1, depends on how much risk I'm comfortable with. But a bull call spread is really simple. If I get a 3-8-2 or 5-0 or 6-1-8 pullback, buy a call, sell a call. If it pays 110 to 150% and price goes higher, I just need price to get above my sell strike and I make money. I don't need it to go to 95. I don't need it to go to 100. It's obviously easier if it does. But, if I go out 30, 45, 60 days and oil's higher, that's probably not a bad thing to do. But define risk. So that way I don't have to chase and hope that it needs to go up to $95 to $100. I just get it to go up above 70. So if there is a rally, pullback, rally to symmetry, that's enough to get paid a decent amount of profit here. That's my trade in oil. So I'm getting a pullback. If I get a pullback 30, 38, 50%, putting in a bull call spread, price goes up, we make money. Price hits symmetry, easy. Probably taking profit before expiration. All right, good stuff. All right, we covered a lot today. Blake, if you're still there, let's fire up some live stream. Good win on daily profit play. Just taking the profit, being safe. I think 69.05 seems safe. I'm out. I could hold it longer, but is what it is. I'm out. Waterfall income, new trades for this week. They're still pending, still good. Newsbreakers, new trade on AVGO. Double ups, we've got the butterfly spread on the upside at 7,200 and the downside at 6,500. That's out for the 13th and the 20th. Engineered options, great masterclass yesterday. Please watch that. If you want to get a bonus strategy out of that, I dissect the entire thing. Pinch point, we still have 10, 11 trades running. We have pinches in all major indexes. Something big is brewing directionally. I don't know what direction. I just know that if and when we get a breakout, we're going somewhere. Hopefully that's, by the end of March or end of April. I'd be shocked to see the market stay in this range for, much longer. It obviously can, but my gosh, 14 weeks seems like a lot. We've been doing this chop since December. So let's see if maybe some non-farm payroll on Friday kind of gets us maybe some flows one way or the other, and we'll see where the market wants to go. Okay, we good? All right. Blake, I'll hit you up here. Okay, you're welcome, Max. Anyone watching on YouTube, thanks for tuning in. Jeffrey in the house, Treasures, Mark, AGD. Thanks for tuning in. We'll wrap it up here. All right, live stream is going to run. We'll cut the YouTube feed and we'll go for waterfall income. Again, all are welcome. Trades are valid for Monday, still valid. We've got 6 of them in, end of March, end of April, pending orders. So if you get into the classroom, you can check out the session we did on Monday together. You can check the trade alerts as well inside the tracker and post them. Okay, thanks, Pete. All right, buddy. Talk to you soon. Bye. Come back and join me today at 3:30 for the roundtable. Okay. Bye.